Welcome back to another video, guys. In this particular video you are going to learn about the chart patterns. Guys, the idea is to identify the trade opportunities in advance. So let's take a quick look at the session's outline. First of all, we are going to talk about what is chart pattern, why this pattern is important, and how it works for us. Like, even though if we identify or if we spot a particular chart pattern, what guarantees that this is going to work for us? So we will speak about this uncertainty. The chart patterns that we are going to learn about is double top, double bottom, triple top, triple bottom, and besides that we are going to talk about the triangle patterns, which are also very efficient in trading. Lastly, we are going to talk about predicting and trading the market moves in advance. Guys, the only difference between a professional trader and between an immature trader is that the immature trader is not able to take positions, he is not able to take trades because he is not able to identify the trade setup, he is not able to identify or predict the market moves in advance. So after this video, I hope that you will be able to spot the trade opportunities. You will be ready to execute positions on this. So if you are like, if let's consider that if you're not able to spot the trade opportunities, so how you can expect to take a trade? So first of all, what are the chart patterns? Guys, the chart pattern provide us a framework to analyze the battle between bulls and bears. It's simply like that in the forex market there are bulls, there are bears, and there is a ongoing war between them. The bulls are dragging the market upward, the bears are dragging the market downward, and these chart patterns gives us a graphical representation of this battle. So as soon as we have graphical representation, which is the chart patterns, these chart patterns helps us position ourselves accordingly. So it also helps us identify the trend reversal areas, as well as it helps us forecast the short term and the long term trades. And why these patterns are important for us? First of all, guys, if we do not have the chart patterns, if we do not have the technical analysis to implement on these chart patterns, we will never ever be able to spot the trading opportunities. So first of all, the chart patterns are a technical analysis tool. Earlier we spoke about the fundamentals analysis, we spoke about CPI, GDP, and the interest rate decisions, but there was a fundamentals portion. In order to analyze the future prices, in order to forecast the future prices, we need to take help of the technical analysis as well, and the chart patterns is a tool of technical analysis. So these chart patterns are going to help us find out the support and resistances, and also it also helps us identifying the patterns which are forming on the chart, and with the help of these patterns we will be getting ready to take a next move. So guys, it means that as soon as you are spotting a chart pattern on your screen, on your charts, you will be getting ready to trade this particular pattern. If you are not using the chart patterns, if you are not using the technical analysis, how you can expect to have a good trade? You can't base upon you cannot simply cannot trade based upon your luck. You have to use your skills, and your skills are the technical analysis, your skills are the fundamentals analysis. I often say that before you enter any position in the forex market, before you make any decision to buy or sell something, just ask yourself a question, and the question is why I am doing this. So if you are able to answer this particular question, guys, you will be feeling more confident than ever before. So these chart patterns are not only going to help you spot the trading opportunities, but also going to help you to answer your question. The question was why. So I am entering a sell position in the euro US dollar because this particular chart pattern is suggesting this to do so. Or maybe I am entering a buy position in gold because this particular chart pattern, the double double top pattern is suggesting me to do so. So guys, that's why we use the chart pattern. And the very common question that comes in our mind is, what's the guarantee? Why these patterns are going to work for us? Why this particular support or resistance level, which I have identified with the help of double top, triple top, triangle, descending, ascending, asymmetric triangle pattern, through which I have identified the support or resistance, why these levels are going to work for me? And the answer to this question is very simple, guys. These are the technical analysis tools. These are available to all the professional traders. Like, all the professional traders are using these chart patterns. They are like spotting these chart patterns. They are waiting for breakout, or maybe they are waiting for the a confirmation to enter their position. So it means that these patterns are not these patterns are not only available to you, but also available to all the investors, all the analysts, all the traders around the globe. Yeah, the thing is that probably maybe 75% of them use them, maybe 75% of maybe 25% of them are not using this, maybe 75% are using it, but they are not spotting a trade idea. Probably this can be happening. One thing I want you to know is, in the forex market, the only person who is successful is the person who is following a herding behavior, who is following a sentiment analysis. Okay, now what is herding behavior, guys? All Even though, like, let me give you an example. Even though we know that the euro should go higher, because the the ECB president Mario Draghi is saying that they are going to hike the interest rate in the future, so euro should go higher based upon this news. But due to technical analysis, there is a breakout, there is a downward breakout in the triangle pattern, and according to technicals, the euro should fall down. So what is likely to happen if the euro is falling down and the investors are following the technical analysis? We should also look for the sell opportunity, because in the forex market, investors follow the herding behavior. If you see a small selling, if you see or a small buying, there is a huge probability that we are going to see market moving into the similar direction. So if you are seeing that on let's suppose, based upon the double top pattern, or based upon the triple top pattern, the gold is having a solid support or solid resistance somewhere around, let me write it here so to make it more clear. So we can say that, let's suppose the gold is having a resistance up there at 1300, whereas the support remains at 1292. So these are the double top and double bottom pattern. So these are basically technical levels. Guys, why these levels are going to work for me? First of all, I have spotted these levels with the help of the maybe double top, double bottom, or maybe triangle patterns or whatsoever. But the idea is that this is not only me who is using these technical tools. There are maybe 75% of people around the globe who are using the same tools. So it means that they are going to find out that the gold is likely to face a resistance somewhere like here. So the probability remains quite high that the gold will rise upward, and then we will see a drop in the market, like just like this. Maybe gold will rise, face a resistance, and will fall down. This is how it works. You will observe that the gold is rising up, gold is coming facing a resistance at 1300, and then as you know that investors follow the herding behavior. So herding behavior says that every one of us knows that 1300 is a very strong resistance level. So as soon as gold is testing this level, we will see sellers entering in the market. Why sellers are entering in the market? Because being like, as we know, the herding behavior, everyone will start selling the gold, everyone will coming out from their buying position, everyone will be closing their buying position. As soon as they do so, there is going to be a selling behavior in the market, and as soon as market tests 1292, there is going to be probably the investors or the buyers will be looming around in this particular area, because they know that 1292 is a very strong buying level. So everyone, when I say everyone, it means that maybe 50%, maybe 30% who are in action, the 40% of traders who are in action, they are going to react. So as soon as we see a reaction from even from the 20% or 25% of the market, there is going to be a reversal, there is going to be a bearish or bullish reversal in the market, and that's exactly what we need to make a profitable trade. So I hope that you understand why these levels are going to work for us. So having said that, guys, in the chart patterns, we are going to focus on the double top, double bottom, triple top and triple bottom patterns. Plus there is going to be a discussion on the triangle patterns, which are like, these are my most favorite. The triangle patterns are very nice trading setups. Like as soon as you spot the bullish triangle or bearish triangle pattern, this is going to give you a very nice entry. So let's move on and let's take a look at how double top pattern works and what it actually is. So double top pattern is a potential bearish reversal pattern. Like it means that I'm expecting that the market will go higher. Okay, let's do this. The market has like placed a high here, and then the market again placed another high here. It means that this become the double top pattern. That is one top, market fell down from here. Then the second top, market tested the same level and then managed to close below there. So market has gone higher. First thing first, it's a potential bearish reversal pattern. Market has gone higher, touching a level that is less likely to be broken. So the price is expected to fall, and then the price is expected to fall. Why? Because earlier the investors were not able to violate this particular resistance level. So this is what we call market has made a double top pattern, and below double top pattern we may see a selling trend in the market. So all I need to do is I need to take a sell position here, put a stop loss here, and then place a take profit somewhere like here. So this is how it is going to work. So once again, in the double top pattern, as soon as you see there is a double top pattern, this is going to be a pretty nice, this can be a pretty nice selling opportunity for you. So just spot like the market was not able to violate this particular high, so market closed the candle below this. So market is again now going higher, and it is reaching below the previous high, and the market, as we know, the market was not able to violate this previous high. So there is a nice opportunity, there is a nice probability that the market may not be able to violate this particular high for now. So let's enter a sell position. So guys, one thing is clear, that the double top pattern offers us a selling opportunity. So let's take a look on the chart. Here we go. So on the chart you can see that the market soared upward, market made a upward movement, fell down, then again market went higher, and then where it tested the market tested the market on the previous top level. So it means that market gives us a closing like this. Here, let me highlight this portion. Probably, yeah. So market is giving us a closings right here. So it means that this has become a double top pattern, and it will be nice to take a sell entry below this, and then this stop loss is likely to be somewhere like here. So guys, this is how you can spot the double top pattern. Let me do this with this thing as well. As you can see, market went higher. So probably this is a resistance, market fell down, market again pulled back upward, tested the previous high, making it a double top pattern, and then we should probably sell here with the stop loss somewhere like here, and then we are good to go for the sell position. And you can see this is how it worked. So Likewise, the double bottom pattern is exactly opposite of the double top pattern. So this is how it works. The double top pattern was giving us the selling opportunity, but the double bottom pattern is likely to give us the buying opportunity. So it is called a market reversal pattern. The market has gone so much lower, and the market is touching a level that is less likely to be broken, and the price is expected to pull back. So this is a buying opportunity for us. Let's do this here. Market fell down, gave us a pullback. Market again fell down, and it is reaching towards the same level where it had a where it reversed before, where it was not able to violate, and market was not able to go downward. So since that was the case, so market has dropped down again, and market has come to this exactly same level. So we can expect a bullish reversal from here to here. So it means that what we can do here is we can take a buy position, probably here, like this. There is going to be our stop loss. The stop loss needs to be below previous low, or below the double bottom level. So we can take a buying position like here. However, guys, one more thing I would like to clear here is the violation of double top pattern or double bottom pattern is also a very nice opportunity, is also a very nice trading opportunity. Let's suppose market fell down, went higher, market fell down, and the trend was, the bearish movement was so much stronger that the market was not able to sustain this level. So it means that the market has market was not able to form a double bottom pattern. So there's a violation on the lower side. The violation normally occurs because of certain fundamental, guys. As we spoke about the other macroeconomic events, there is, most of the time there's a breakout in this particular pattern during the news, during the release of any fundamental. So let's suppose due to release of fundamental, the market was not able to survive above or hold above this particular support level, and since it has already been violated, so what's my role here? I will be waiting for the market to give me a closing below this particular support level, which has now become a resistance, and then after a slight retracement, when market retests this particular support, which is now going to work as a resistance, we can expect another sell position below this. So this is how the double top and double bottom pattern, which are violated, are going to help us in spotting another trade opportunity. So here's a quick look on the double bottom pattern, guys. You can see here that this is exactly the way we spoke about earlier. Market fell down, faced a support here, has a full pullback, fell down again. So this is my buying point. So I will be entering a buy position here with the stop loss below this particular low, or this particular double bottom pattern, and then we are good to target good to have our target. And as soon as the market is violating the double top, there is going to be the same level is going to work as a resistance level, like a support level. So let's see, market went higher, fell down, went higher, fell down, and then market went higher, has a breakout, market broke out upward and fell down, and then again this is going to be our buying opportunity. Why? Because market was able to violate the previous highs, and now the same level is going to work as a support. So what we can say here is the support level which is violated is going to work as a resistance, or resistance level. Let me highlight it here for you. Probably all right, yellow color will suit here. So we can say here the resistance level which is now violated is going to work as a support level right now. So you can see here the resistance level which is violated here is going to work as a support level now. So then we can take a buying entry here, and once again market went higher, fell down, pulls back upward, where it pulls back to the previous high, which is making it a double top, and then we are good to sell, where we are going to sell to the previous low. So guys, this is how double top and double bottom pattern is going to work. Same is the case with the triple top and the triple bottom. The only difference is the time, number of times it is testing the previous high or previous low. For example, you can see here the market went higher, fell down, went higher, giving us a double top. So the one thing that we can do here is we can take a selling position here, and then when market falls down, there is basically where market falls down to the previous low. So you can see that that has become a double bottom level, so we can take a buy position here, and as soon as we take a buy position, we need to close our position because that has become a triple top pattern. Market is testing the same level for the third time, like 1.31 1.311 is a triple top level, which means that we should close our buying position. So the indication here is we can take a sell position here, where we are going to close our position to the previous low. That becomes the triple bottom, sort of a triple bottom, not a perfect triple bottom, however a sort of a triple bottom. Then again market went higher. It's the fourth time now is the fourth time that the market is testing 1.31 and giving us a sell opportunity, but this time market was not able to go deep down, and then there's a reversal and market just violated the triple top pattern, and now market is likely, this particular level is likely to work as a support. So what we can say here is the resistance level, which has now been violated, is going to work as a support level. On the other hand, the support level which has been violated, let me draw it for you guys. Like let's say this is a resistance, this is a support. The support level which is violated is going to work as a resistance, so it means that market fell down, market will bounce back, and it will bounce back to the previous resistance level, which is previous support level, which is now working as a resistance, and then we can take another sell position. Likewise, let's suppose the resistance level which is now violated here is likely to work as a support now, and the market is very likely to test this level and take a bullish reversal. So yeah, having said that, this is how we can take the buying or selling positions, or this is how the triple bottom levels are going to work. Alright, so now let's speak about the triangle patterns. Guys, there are three different types of triangle patterns which are very helpful for identifying whether the market will be breaking out upward on the bullish side, or market will be breaking downward on the bearish side, or there is going to be a neutral sentiment of investors. So let's talk about them one by one. So the pattern that you are seeing here on your screen is the descending triangle pattern. Guys, how we know this is descending? Descending means that we got a descending pattern, like there is a downward trend line, then there is a horizontal support level. Like here you can see there is a horizontal support level, and then there is a downward trend line which is linking 1 2 and 3 highs, and this is becoming a very nice downward trend line. So this is a descending triangle pattern. Okay guys, for your information, the descending triangle patterns are very likely to break downward, because this is how it works. Like let's suppose it is first of all, this is representing a bearish sentiment of investors. As you can see here, the market is going higher, falls down, going higher, falls down. It is like lowers, it means that the market is consistently making lowers high and lowers low, like lowers high, lowers low, lowers high and lowers low, which means that sooner or later market will test this level, and then market should break downward. So guys, the descending triangle pattern are known for having a breakout on the lower side. So as soon as, like, if I'm able to spot this particular pattern, I will not be looking for the buying position. I will be looking for a breakout, and probably I will set the sell limit or sell stops below this particular level. So once again, this also happens, guys. This is whenever we say this is going to react in this way, this is all about probability. Like it can be a possibility that due to certain fundamental release, there is a bullish breakout. Just like here you can see that the market tried to violate the descending trend line. market tried to violate it here, but after placing a high, market fell down and closed just below this resistance level. So once again, the descending triangle patterns are known to break out. They are known to break out on the lower side, whereas the ascending triangle patterns are known to break out on the upper side. Like here is an example, guys. You can see that that's an example of a descending triangle pattern. The market was facing support here. There we got a horizontal resistance level. There we got a descending trend line. You can see here market went higher, fell down, went higher, fell down, and then yes, then we have a breakout here. And one thing I would like you to know is, guys, how do we know that this is a breakout and this is not a fake out? There are two things that we need to know. There can be a breakout, there can be a fake out. So as soon as market is violating the previous low level, which can be double bottom level, so as soon as market has violated this, you can see the market is closing. Market has given a closing right below the support level, which means that this probably can be a breakout. But in order to make sure that this is a breakout, we need to wait for another candle. And I normally suggest to wait for 2 candles to make sure that this is a breakout. So you can see here, after a first candle, which is a doji, which is closing outside this triangle pattern, it's a very nice indication that this pattern is not going to work anymore. So we are going to have a selling here. And guys, there is a nice chance that the selling is going to be equal to this particular high to low level. Like, it means that from here to here you can take a count. You can count the number of pips. So selling probably will be as at least equal to this particular area. So we can expect a drop down in the market. So let's take a look at the other patterns. Okay, so guys, as I was saying, that we can expect, like, it is not necessary that there is going to be a breakout on the lower side. Market can violate the patterns on the upper side, on the other side as well. So here we got a scenario. You can see that there is a trend line. There is a descending triangle pattern, and as you know, the descending triangles are very likely to are very likely to break downward. But in this particular scenario, the market has violated upward, so this can happen with us. So better, you should be ready for this as well. On the other hand, if we speak about the ascending triangle pattern, the ascending triangle pattern is exactly opposite to this. So we can say that ascending pattern is likely to work as there is going to be a bullish trend line and there is going to be a horizontal resistance. So this is how ascending triangle works. Then testing high, falling down, testing the trend line, and then boom, a bullish breakout. And so what we can do here is we can take we can set a buy stop here, or if we are available, we need to wait for 2 candles closing outside this horizontal resistance level, and then we are good to enter a buy position. And lastly, guys, we have a asymmetric triangle pattern. The asymmetric triangle pattern is a neutral pattern. It shows the neutral stance of investors. It shows that investors are confused and they will be looking for a certain reason to give us the breakout. So in the case of asymmetric triangle pattern, you can see the asymmetric triangle patterns are something like this: the one trend line from the upside to downside, then the one trend line from the downside to upside. So it is neither ascending, neither descending, but asymmetric. It means that market is showing a neutral sentiment. So we can expect a breakout on either side, or market can continue to go higher like this. So most of the time the breakout occurs when there's a news, when there's a macroeconomic indicator, probably a CPI figure, probably a GDP, probably a interest rate decision. So in this particular case, GBP USD has a breakout on the lower side, and as soon as market fell down, we can take a sell position like here. The stop needs to be somewhere like here to make sure that we are covering up ourselves against the loss as well. So guys, that's pretty much it about the triangle patterns. We learned about the double top, double bottom, triple bottom levels, as well as we also spoke about the triangle patterns. And I hope that after a few after practice for maybe a few weeks, maybe 1, 2, or 3 weeks, you will be able to master these skills. So that's it for now. See you guys again in the next lecture, and thank you so much for joining me today.